Our estimates for the year as a whole, let me start with the year as a whole. It implies that a real GDP would contract by 5% in fiscal year 2021. This is the fiscal year from April 2020 to March 2021. We were at minus 0.4% in our previous forecast. So therefore, this is a really gigantic downgrade. And a forecast of minus 5% for the year as a whole would be as deep as compared to the deepest recession India has witnessed since 1979. Let me go over some of the details. As you pointed out correctly, we expect a deeper trough in Q2, which is the April to June quarter. We are now forecasting GDP to contract by 45% in quarter-on-quarter annualized terms in Q2. We were at minus 20% previously, and this is really due to two reasons. One is the extremely poor economic data in March and April. For example, India's services PMI fell to a record low of 5.4 in April, probably among the lowest readings ever globally. India's exports and imports both reported a contraction of 60% year-on-year, 60% year-on-year in April. And even for the month of March, where the lockdown was only there for a week, industrial production contracted by 17% and exports contracted by 35%. Our GS India current activity indicator is now running at minus 10%. And the second reason for this deeper trough is that we are incorporating the effects of the lockdown extension. We are now in phase 4 of the nationwide lockdown. Going forward, as you asked, we are expecting a strong sequential rebound in the third quarter, but this is almost mechanical. When you have a quarter with a sharp contraction, next quarter is likely to rebound. And we have upgraded our expectations of a rebound in Q3. We are expecting a 20% Q-on-Q annualized gain in Q3 compared to 10% before.
How much will the government's fiscal package help in supporting the jobs market, in bringing about enhanced output, and really helping businesses come back online?
So, Tanveer, we believe that the discretionary fiscal policy support, which macroeconomists define across the world as direct support to households and businesses, which can actually minimize the second round effects of the pandemic and make any economy quickly rebound in times of an unprecedented shock, has been fairly tepid so far. Our calculations, in fact, suggest that in aggregate, the discretionary component of fiscal support across 6 phases of announcements by India's finance ministry remains small at 1.3% of GDP. Much smaller than the aggregate figure you must have heard of 10% of GDP or 20 trillion INR economic package announced by the Prime Minister. In fact, our fiscal impulse calculation estimate only a moderate fiscal impulse, even after including the central government stimulus package announced so far. And importantly, the discretionary component of India's fiscal policy support remains small compared even with other emerging economies, and of course, far less with other advanced economies.